But let's move on despite opening the year 2020 on a positive note, with the main market index recording a 10.4% improvement. The Nigerian Stock Exchange could not sustain its growth momentum as a result of disruptions caused by the coronavirus pandemic. In the wake of the pandemic, capital imports to Nigeria fell by 77.88% to $1.29 billion US dollars in the second quarter of 2020 compared to the preceding quarter. Indeed, huge stock market losses were recorded at different periods during the first and second quarters of this year, as COVID-19 turned out to be a double whammy of health and economic crisis. But following the easing of travels and quarantine restrictions, Nigerian equities market somewhat appeared to be on recovery in quarter three. I have joining me to analyze the performance of the market amidst this disruption is a stockbroker and a financial analyst, Mr. Charles Fakuta. Thank you very much for your time.
Thank you, Tolu, for having me. It's nice being here.
I really appreciate your time. First, what you look at the performance of the market and what we've seen. Take us through. You're a player in this market. Take us through what you've seen, maybe post-COVID, and what we have and what we should expect.
Okay, thank you very much. Before I will answer your question, I will just say everything was centered on leadership. The leadership of the capital market, the regulators and the operators displayed professionalism and transformational leadership skill. That is why we are seeing recovery today. And of course, the doggedness of the Nigerian investor and the quoted companies. A leader faces the music, even if he does not like the tune. Calamity is the best test for integrity. Like you have said in your intro, when the market started, beginning of this year, there were a lot of promises. First quarter, we saw the losses. Second quarter, COVID-19 has taken up everywhere. Yes. And it became a lot of uncertainty. The players, the regulators didn't even know where and what to do. Like I said, leadership came into play. By 24th of March, 2020, the regulator, SEC, came out with guidelines to ensure that there is continuity of its operations. Following that, the stock exchange also came up with their own guidelines, activating their business continuity program. And you could see that when we were being told in the past, we should upgrade our technology, MOS. Some operators thought it was just a child's play, and we saw that being deployed. And when the COVID was so strong, there were complete lockdown, we could still see trading going on. And most investors became so happy. At first, they did not believe, even the operators did not really believe it, that they could be in the comfort of their house. They send their mandates to their broker via phone or whatever. The broker gets it, sends it to his compliance, it's confirmed. And from the comfort of his bedroom, any remote location, the broker is trading, and by T+3, the investor is getting money value. And most of them call and say they can't believe it. This was made possible because of leadership influence from the regulators.
Leadership is really key.
It's key. What they did was they made sure that all operators, you come to them, they configure your system, your smartphone, so that at the comfort of your bedroom, there was no need for a face-to-face interface, and all this was going on. Now, all the activities were still going on smoothly. Even the quoted companies, they were still producing. Of course, I must say it was sectorial, because we saw most of the positive returns from the telecom companies. They were posting a lot of returns because data was being used. Exactly. And when we saw that, in fact, the quoted companies were so surprised that they could also even raise money within this period. There were a couple of right issues that were done successfully. There were a couple of even listing of new shares. And of course, what we traditionally call the sounding of the closing gong was done virtually.
Wow.
The companies in the comfort of their home or whatever, this process took place. Then a lot of technology were deployed to ensure that this thing goes on. Another thing I must mention again was the Nigerian Stock Exchange activating what I call the VPN, virtual private network, that they could do everything seamlessly in terms of trading. In your bedroom, you are trading, having issues to log into the trading machine. You are calling somebody, you don't know where the person is, and it is being fixed for you, and you continue your trading. So I must give kudos to SEC and at the same time to the Nigerian Stock Exchange.
That sounds really good. Leadership, very key, and also the use of technology, which we cannot wish away, particularly at this time. Let's now look at quarter-on-quarter performance of the quoted companies. What do you make of what you've seen?
Yes, your last guest was talking about Nigeria being investment destination.
Yes.
I must also say here that for the period so far now, the Nigerian Stock Exchange is adjourned the second best performing market in the world.
That's a good one.
With a market cap of over 18 trillion and a yield to date of over 30%. You can't get that anywhere. There were a number of factors that contributed to this outcome. The quoted companies, they were on top of the game. They ensured that they continue to be in operation despite COVID-19, at the same time maintaining and observing all the protocols of COVID-19. They could also file in their returns via electronic channels. So it's like COVID-19 stimulating the ingenuity of the Nigerian fintech space, of the Nigerian technology being deployed in the capital market. You could be in your house and you are sending your returns. So we could see these activities were going on without each. And that encouraged the operations of these quoted companies. And that's why we're seeing them posting good results at the same time, even paying dividends. So when investors now begin to see that this was the only way they could get dividends, this is the only way they could get returns from their investment, they now became so serious with investing in the Nigerian capital market.
Now look at the performance of special FG and treasury bills and bonds market transactions, particularly at this time. That space seems not to be attractive at all. I used to take advantage of it, I must confess, at a particular time, and I have friends, colleagues that have done that. But at the moment, it's not even attractive. Interest even on your savings at the moment has also been reduced by the CBN. So where will we put our money?
Okay, good. You know, the Nigerian market, the stock exchange, is a multi-asset exchange. It's not just only equity. We encourage investors, even issuers. You could come to the market using different instruments to raise funds. Of course, the federal government is doing that very well through DMO, using bonds. And we also noted that the bond market has increased about 17 trillion from the beginning of this year. So for investors, we encourage, even ETFs, New Gold has returned over 60% this year. Over 60% this year, year to date. So you can see that it is a matter of balancing your portfolio. If in a particular asset class, you are not getting your desired return, of course, there's nothing stopping you from rebalancing to meet your investment objective. And that's what really happened. You will see that even when the federal government, like you said, reduced the interest on deposits and all that, you could see that when those maturities came to due, now investors were looking for an instrument that they can get yields, returns that will meet their investment objective. And the only place they could see was the Nigerian capital markets. They don't just came and started investing just like that. They invested in sectors that has strong fundamentals and they believe will meet their investment needs.
What are these sectors that we're talking about? Banking.
The banking sector was there.
Telecoms.
The consumer sector was there. Industrial sector, even the telecom sectors. But again, this has to do with each individual investment objective.
True. True. That's also true. Individual objective is also something very well. Investors' confidence is very key at this time as we move towards the end of the year. What more are you expecting this market wrapping up the year with what you've seen, with what we've been talking about? What are you looking at for the end of the year at the Nigerian Stock Exchange?
Yes, one of the highlights of the circular that SEC put out early this year was continuation of investors' protection efforts and relevant enforcement action. That is, despite COVID-19,
yes,
we are trading virtually. The regulators didn't shy away from the responsibility of protecting the markets, ensuring that any infraction, because virtual, when it is virtual, then it becomes very easy for tech smart kids to hack into systems, cyber crime, cyber security. All that was taken into consideration in terms of risk management. You can also see that within the same period, there were full disclosure. If as a broker, I do a transaction for a quoted company and maybe it's an insider, maybe the MD, the company secretary, or whoever, that will be disclosed to the Nigerian market. So you will see that investors' protection was key because investors need to know what is happening in their company. So the regulators were very, very at it in terms of protecting investors within this period, despite the challenges of COVID-19. Moving forward this year, of course, we're already towards the end of the year.
Yeah.
I see that being continued. And at the same time, the operators also know their role they have to play in ensuring that they don't involve or engage or encourage anybody to get to the market with ulterior motive. Rules and regulations are in place to check if such events will happen.
Now let's look at today's figures. I have it in. The market is closing negative with all share index down 1.31%. Top advances for today, we have Okomo Oil, GlaxoSmithKline, Unilever, FTN Cocoa, and M Benefit. Top decliners, we have WAPCO, we have Guinness, Zenith Bank, Dangote Sugar, MTN Nigeria. Third straight day, the market has been down this week despite all of these beautiful figures we see. What could be responsible for this?
Yes, like you said, third straight day, we are having a negative market. It is not unexpected. We are approaching the festive period.
Sales for cash?
That could be one of it. Yes, sales for cash. And of course, it's for every festive period, we expect people, okay, I've invested so much and I need to realize my investment to meet up the expenses of the season. And that will be done. Of course, at the same time, even without even selling for cash for the period, if you are invested in some equities, and you have seen a return of over 30%, then of course you have met your investment objective. The only natural thing to do is for you to realize. And you also know that the growth we saw in the equities market has been driven by the domestic investors. And institutional, they were targeting Nigerian companies that have strong fundamentals because they believe once these maturities from these other money markets not meeting their investment objective, the only place is to come to the equities market. Not just, like I said, strong fundamentals. And that's why we see the hot beats in the equities market. Now, we are getting ready to the end of the year. Of course, you have what they call the Santa Claus rally. We are still going to experience that maybe towards few days to the end of the year. But for now, profit taking, selling to realize, to meet investment, to meet festive period expenses is what we are seeing playing out in the markets.
So that is what is happening this time. Everybody wants to get more money. But you talked about sectors. Let's look at also the agricultural part of it, the players in the market, the Okomo Oils of this world, and how are they faring at this time?
Yes, you know that agriculture plays a major role in our economy. And the government is doing everything to try and just... You know, but the thing is not just the agriculture itself, the value chain. The production in the farm, the harvesting, and all those value chain, it will pass through before getting to me and you in the market. If that is properly taken care of, we will see that sector doing so well. I mean, I've seen professionals who have gone into agriculture using tech to kind of run the operations, and we are going to see a lot of that. Of course, we cannot rule out insecurity in certain places in terms of doing agriculture. I'm sure if all that is taken into consideration, we will see agriculture coming back to take its rightful place in the GDP of the country.
Almost finally, you talked about domestic investors taking charge of the market, but we also need foreign investors to come into this market. Well, I was speaking to the CEO of NIPC. She touched on that. But we see on this part of the world that we have more foreign portfolio investment other than foreign direct investments. is that still playing out?
Yes, like you said, you know that in fact, capital will go to anywhere that the return is high. And at the same time, they also have to take into consideration the risks involved. So you see foreign portfolio investment coming to the country because they know that once there are any eventualities, it's easier for them to pack up and leave. And that's why we are encouraging domestic investors to take charge of the market. Make sure that you take advantage of this market very well. Yeah, no nation can operate in isolation. We also need foreign investors to come back. We don't want the foreign investors to be dominating. We want to see a 50-50 play or more of domestic investors compared to foreign investors. Before you ask your last question, I want to also mention there were also challenges within this COVID period.
Of course.
Within this COVID period.
Yes.
There were a lot of challenges in terms of this virtual trading. There were cases where traders will be trading. I've been called several times. I can't have access to trading machine. I can't do this. I can't do that. But again, like I said, leadership, the exchange, technology operators came to the rescue, and we saw a lot of things. I will also mention that one particular event that happened in the Nigerian capital market, especially the Nigerian Stock Exchange. Within this COVID period, this pandemic, we were able to train over 50 authorized dealing clerks. That is historical. It is for the first time. We even had to do an induction ceremony virtually, where because I was the main participant in that training, I had some of my trainees who were being inducted as an authorized dealing clerk from Port Harcourt, from even outside the country, and we're able to do that. Is the first time in the history of the Nigerian Stock Exchange, and I think it is commendable. It didn't just come as easy. A lot of work went into it, and today we have seen the success. And we believe, moving forward, 2021, we're going to be seeing more channels and more improvement in what we have seen for this 2020. But at the same time, the market mirrors. It's a barometer of the Nigerian economy. So we expect the government to do their own part in terms of fiscal responsibility. Then, of course, the Nigerian capital market operators were ready to abide by the rules and regulation, play by the rules, be ethical, be professional, and ensure that we begin to attract more and more companies to the capital market and make it one of the best in the world. Thank you.
Mr. Charles Ramos, thank you very much for your time. I really appreciate you coming to joining us on this show, sharing your thoughts with us on this very important topic. Thank you very much, Amos.
Thank you, Tolu.
All right.
It's nice being here.
Yes.